Hey, John. How are you doing this week?
Hi, Joe. Good, thanks. Like last week, quite a bit going on. I wanted to, we've talked, as we always do, prior to recording, but I wanted to mention something that I was able to watch yesterday. This was a combination program from the Atlantic Council and our friends at the Antiquities Coalition. So it was an hour-long discussion on examining Russia's assault on Ukraine's cultural heritage. The reason I mentioned this, besides the obvious, because of what they discussed yesterday, it is we were going to have a podcast with the folks from Antiquities Coalition, but we put it off because this event was coming up. But basically, we've talked about cultural racketeering before, and obviously that has a major impact on societies, major impact on understanding history. This particular one was fascinating. They had the ambassador of Ukraine to the United States was one of the speakers. They had Dr. Louise Shelley from George Mason, who I know very well because she runs the track program where I teach, and she talked about issues of relevance there. But just a couple things that jumped out at me that I think are relevant to those in our industry that are looking for ways to be proactive, to find, red flags and other financial footprints that could be indicative of cultural racketeering. But they said, given the attacks by Russia on Ukraine, what's happened since that, 200 million Ukrainian books have been destroyed, which is an insane number, obviously. 35,000 artifacts have been stolen. And then over the course of time, 2 million artifacts have been lost. And a couple of the things that are relevant, again, in terms of trying to figure this area out, they said museum officials in Russia are personally responsible for cultural racketeering. I thought that was interesting. And then President Zelenskyy just last week, issued personal sanctions against a number of museum directors there. So I thought that was interesting. So there's been sanctions issues, another thing in our space. Dr. Shelley called this a dual-use crime. It undermines the communities besides being thefts of value. And again, she also echoed the complicity of museum directors. So I'm sure that the recording of that will be on both I assume, again, on the Atlantic Council's website and on the Antiquities Coalition website. And the last thing I'll mention, because it's relevant to what we always talk about, they said the use of AI to find objects is being a good investigative tool. So a lot going on in that space, but I did want to just start off with that. But let me just jump into a couple of the other items that happened late last week. We have talked about what I will call the pausing of the investment advisors rule several weeks ago. Now what's called the exemptive relief order to delay the effective date of that rule has been issued by FinCEN through the Treasury Department. This just came out yesterday, basically. And so we've talked about this. But according to the note, they say that the rule was set to become effective January 26th. FinCEN is going to instead issue a proposed rulemaking to propose a new effective date no earlier than January 1st of 2028, which, again, just gives the investment advisors freedom from rules that others have had to abide by. But here's a couple of lines that I want to read from the order. Consistent with the administration's deregulatory policies focused on reducing any unnecessary or duplicative regulatory burden on Americans, the Secretary, through FinCEN, has determined that this rule should be reviewed to ensure it strikes an appropriate balance. And that's going to exempt investment advisors from the obligations. What's interesting is the next line. While the illicit finance risks associated with investment advisors remain, the review will allow FinCEN to ensure that the rule is consistent with the administration's deregulatory agenda. So they are making it clear that it's still a problem, but we'll wait until 2028 to address that. So wanted to go ahead and mention that.
I mean, there's nothing like opening that up, John, and just getting a chance to read people talking out of both sides of their mouth. I think that's the easiest way to define that.
That's true. So there's been some activity in the crypto digital asset space. What are some of the things that you've seen?
Yeah. So on that front, we saw a an update on the 30th of last month. Essentially, the president's working group on digital asset markets releases the recommendations. So based on what I saw, John, like a couple things jumped out to me. Number one, it covers quite a bit of ground across different actors in this space. Things like granting the CFTC authority over non-security digital asset spot markets, modernizing, banking regulations, or at least talking about it. The interesting thing, though, is as I was reading this, there's a lot of ambiguity, and it's not, given where we are in this process, I'm not shocked by that, but it was something worth calling out in that, obviously for folks that are tremendously entrenched in, the DeFi space or kind of the crypto space, this is cause for excitement. Hey, at least we're talking about it. We're seeing some movement here. I think the underlying expectation for just about anybody in the regulatory space is we need a little bit more thorough direction from a regulatory perspective, and just ensuring that, as we're encouraging innovation, as we're looking at things that kind of come out of even what we've talked about in previous weeks, the Genius Act and other things, that ultimately we still want to create a safe and secure, financial space in order to allow for these types of actions. But so again, it's kind of a mixed bag for me. On the one side, it's exciting because obviously we're continuing to see some movement in this space. On the other, I think it left me wanting in terms of, obviously what we're going to see from a directional perspective.
Staying with the issues related to crypto, FinCEN earlier this week issued a notice on the use of convertible virtual currency kiosks for scam payments and other illicit activity. And so the full notice is available, obviously, on the FinCEN website. It's an overview of typologies that are associated with these kiosks, the rise in scam payments, as by the title there, facilitated, including tech and customer support scams, bank imposter scams, and some of these impact disproportionately older adults. So there is that mention as well. So that's another. FinCEN I believe, always does a really good job on their notices and providing information to banks and others. So that's a good example of that. And so I wanted to highlight that as well. And then also the Hong Kong Monetary Authority released final guidelines on implementation of their reg regime for stablecoin issuers. They, among other things, ongoing monitoring is mandated for customers, and that's, of course, using transaction monitoring and blockchain analytic tools, among other things. So there's a lot in there for those of you that do business or need to know what's going on in Hong Kong. So that just came out this month. It's a 48-page document, and it's a guideline, again, for licensed stablecoin issuers.
Yeah. And on that front too, I think to kind of round it out, we're also seeing some developments to the north, our neighbors up north too. I know you had mentioned Nick Burbidge that actually posted about this earlier this week, but Canada essentially released a financial system stability assessment. What did you see in that was worth calling out?
Yeah, so this came out from like you said, from the IMF, International Monetary Fund, and this late last week. And this is a staff report on the financial stability of Canada. And there's a number of things in there. A lengthy document, but it talks about AML issues. It talks about just regular oversight regulation. And I guess what I would highlight is that they clearly are concerned about a number of kind of the way the system is set up, I guess is the best way. According here from our board member and our friend, Nick Burbidge, he said they note that the concern is the exit from the regime by OSFI, and that was the Banking Oversight Agency in 2021, and the need for better supervision, better supervision, something that I think Nick had talked about before. It's clear that was a strategic error. This is Nick's point of view. Remember, he was an OSFI official. The report also notes the relatively unchanged high market share of financial services by 6 largest banks designated as strategically important by the IMF. And then I would say take a look at the report and come up with your own conclusions. But again, this is the IMF review of Canada's financial system.
Yeah, and the one call out I'd have there, it kind of echoes your statement. It comes directly from the first page is, while financial sector oversight and crisis management frameworks are robust, they could be further strengthened to proactively address emerging challenges, which I think again just kind of solidifies what you had mentioned. You also sent me a very interesting video, which obviously we're not going to play here, but it was a fascinating coverage by John Oliver. So anybody familiar with his HBO show? But what was fascinating was he was essentially covering deferred prosecution agreements or non-prosecution agreements. And there were some call outs in terms of, folks, operators within our space. What was your take on it? Please refrain from any explicit language.
Yes, I wouldn't. I can't do John Oliver, but again, last week with John Oliver's last week program, you can watch it on YouTube or some of the streaming services. But they talk both about DPAs and corporate crime in general, corporate white collar crime and corporate crime, and also corruption issues. And DPAs have been a controversial prosecutorial tool for quite a while. But in our space, in the AML space, you've seen that used quite a bit in the past 20 years. In fact, I had a presenter in my class that I teach at George Mason talk specifically about the DPAs, and I think that's part of what Oliver was focused on. Basically, is there's fines and penalties, but what happens is you, as the acronym states, you're waiting to prosecute, or you're holding prosecution to the side, basically, as long as the institution fulfills the improvements and the changes that were required in the case, right? So that's what DPAs are designed to do. But others feel that it's sort of a softer touch because sometimes the dollar amounts are certainly to the average person seem staggering, but they're not, given the scope of some of these institutions. I'm not saying that's right or wrong, and obviously it's hard to bring white collar cases. So I think another reason why prosecutors go to DPAs, not that it's quote easier, but certainly there's not as much evidentiary issues as there would be in a criminal case. I mean, that's pretty clear. So anyway, it is worth watching, obviously, with some of it done with tongue in cheek, but there's a lot of good solid facts there. And frankly, the cases that they mentioned, we are well aware of. So again, that's last week with John Oliver.
Bingo. So kind of moving along, at least from an accent perspective and moving into the UK, I know you had sent something over to me too regarding a UK lawyer that was fined over due diligence failures. This was specifically in terms of a property deal that was linked to family members of an Azerbaijani official. I read that and it was kind of just a reminder, hey, do your due diligence, know who your clients are. I have to assume I'm operating on the assumption that that this was not overly nefarious, but even if it was, which very well could be, I think it's a good reminder to that group. But from your perspective, what else kind of came out of that, that press?
Well, the whole debate on gatekeepers, right? One of the issues with oversight in the AML space is, should gatekeepers, accountants, investment advisors, CPAs of any kind, lawyers, should they have an obligation above and beyond to their clients regarding AML? And obviously in Britain, they do. This, again, was identified by the Organized Crime and Corruption Project, a group that if you're not already following them on LinkedIn and getting their newsletter, which are free, you should. This wasn't exclusive. You mentioned it. The solicitor was sanctioned for breaching AML rules related to the funds from the children of that former security minister. The tribunal fined that lawyer for misconduct. In addition to the fine, this individual was barred from holding any legal management or compliance roles for 5 years and ordered to pay about $64,000, so £50,000 in legal costs. But it's interesting in that we do not have gatekeeper requirements in the U.S. That certainly was going to be proposed by the previous administration. That's no longer going to happen, but we'll see. FATF has been pretty strong on this issue, wanting gatekeepers to be included. And again, I'm a lawyer myself. The American Bar Association has been adamant that should not be the case. So this will continue to be an interesting debate going forward. So I thought we'd mention that. And since we're talking about the UK, I did want to mention something that also was just issued. This came from the Office of Trade Sanctions. implementation, which is a sub of the Department of Business and Trade. And this is guidance just 2 days ago of what we're recording, countering Russian sanctions evasion. So this is guidance for businesses in that space. And so this is specific to trade sanctions targeting Russia. But as the document says, the advice can be translated to other countries where the UK government has imposed trade sanctions, which would include Belarus, Iran, North Korea, and others. But the guidance document on sanctions evasion does a couple things. It gives you information on the range of goods at heightened risk of being diverted into Russia, red flag indicators of potential sanctions evasion via circumvention, suggestions for compliance best practices and enhanced due diligence, and additional resources to aid businesses in managing their risk and meeting their compliance obligations. So again, a document just issued August the 4th from the UK.
And that will be obviously an ongoing fight from a sanctions perspective, let alone, obviously the world conflict that's happening over there. The one added piece that I thought was interesting too is, they kind of position this as a means to help protect technology from misappropriation and to prevent the financial loss and reputational harm which could arise as a result of engaging in sanctioned trade. Which again, when you think about it, nobody really wants to end up on the bad side of a sanctions list. And so worth reading, especially for our listeners over across the pond, but certainly just as fascinating and interesting takeaways that could probably just as easily be applied here as well at home. I think to kind of round things out, there was also an interesting article that came out of the Wall Street Journal earlier this week. Essentially, the White House was prepping in order to punish banks that discriminate against conservatives. That was essentially the headline. Obviously, it goes into a little bit more detail around the expected executive order. But from your perspective, John, what were a few things that jumped out to you on that front?
Well, we've heard this. They've put it under the rubric of debanking. We know it as de-risking when banks make decisions based on risk tolerance, risk appetite, and risk mitigation. The argument is that crypto dealers and gun dealers and just conservatives and religious organizations have been discriminated against by banks who didn't want those accounts. I'm very skeptical of the premise. I don't mind saying, I think calling this Operation Choke Point 2.0 is insane. I'm sorry to say that's not what happened here. We know a lot of these banks. We work with a lot of these banks, whether they're clients or not, and they make risk-based decisions all the time. So this executive order has become personal for Trump because he said that he's been discriminated against by JP Morgan and other banks when he was in the private sector. I would just suggest that part of the decision-making process they look at with risks, they look at bankruptcies, they look at loan defaults and other issues, so that gets factored in by these institutions. But the Wall Street Journal article said they're going to have this executive order that would fine banks for dropping customers for political reasons. It'd be interesting to see what the wording is there, to say the least. It directs regulators to investigate potential violations of credit, antitrust, and consumer protection laws by financial institutions. I thought they already did that, but I guess we'll see. And banks have been updating policies and meeting with officials and say that their decisions are based on legal, regulatory, and financial risk, which I totally agree with. So we'll have to wait to see the executive order. Remember, executive orders don't always have the authority that people think they do. But the bottom line is, certainly with a decision by the agencies to get rid of reputation as a factor in exam oversight, they're already going down that road. And there are several states which have already passed laws that if an individual or company feels they've been discriminated against for, again, my words, I remember how it's phrased, for political reasons, they can bring an action in those states. I know Florida is one of them. No actions have been brought yet because I've asked our clients and our friends that have institutions there, but that's going to be what they're going to try to do at the federal level. Again, at the end of the day, there are priorities that are set by law enforcement, things that institutions should look for, and financial institutions have to make those decisions based on that, but also credit worthiness and other factors that go into that. So this is going to bear watching. This could really change the landscape of how institutions handle accounts, how they close accounts, and the whole issue of, are you going to have to disclose when you file the suspicious activity report? It's a felony to do that now, so I don't know what's going to happen with that.
Oh, right. And I mean, obviously we saw some other news that that was almost directly linked to insider information that got out at a different bank. But John, this also reminds me of what we covered. I think it was 2 weeks ago in Wolfsburg Group, kind of reiterating the risk-based approach, right? And at the end of the day, I fully agree with your position on this. I find it interesting and kind of head scratching how the requirements or kind of the criteria are going to be met in terms of a politically motivated de-risking or debanking action that does not somehow incorporate a subjective set of criteria. So I'm with you. It'll be interesting to see how this progresses. But at the end of the day, my hope is that logic prevails. And again, we look objectively through the lens of a risk-based approach across the financial landscape.
So, Joe, it's been fun doing these couple with you. So I appreciate that. And you are more than just a stand-in. So I really appreciate your partnering with me on these.
Yeah, well, and I sincerely appreciate the opportunity, the good opportunity also to remind folks. So Elliot will be back next week. So we'll get the dynamic duo back together. A couple other things for those of you that have not signed up yet. John, you're gearing up to lead a tremendous conversation at the end of this month for our monthly series of webinars. This one is fraud, coping with the growing threat of fraudulent action or activity. I know that in last week's episode, we kind of talked about the panel. So for anybody that's out there that tunes in weekly, we hope that we can see you on August 28th. That begins at 1 p.m. Eastern. And the last housekeeping item I will say is for our friends across the pond. AML RightSource has taken a significant interest and certainly will be fairly active in participating at the upcoming One LOD event that's happening in London on September 11th. We're actually leading 2 separate thought leadership sessions. So for more information on that, please keep an eye out on social. You'll start to see not only folks that we're sending, but some other information. John.
Yeah, I just want to mention one of the things since you talked about that. On August 21st, I'll be moderating a panel at the SAS Counterterrorism Conference in Cary, North Carolina, and it's going to be a 20-year look back. So it's been 20 years since SAS started this amazing program, and so my panelists will be Megan Hodge, Rick Small, Dan Soto, and Jim Candelmo. So there'll be a lot of good debate going on that day regarding the past 20 years of AML CFT. So looking forward to that.
Fantastic. All right, John. Well, this will probably be my final sign off for a bit here, but hope you have a great rest of your week, and we'll catch you guys next week.
Take care, man.
Yep. Bye-bye.